Hi traders, welcome back to my channel. This is Forex Shinobi. So on today's video, I'm going to be talking about how you're going to combine most of these things you learn on your Forex journey or on your trading journey. Things like the psychology levels, the chart patterns, like the head and shoulder pattern, then the demand and supply zones. So this is volatility 10 index, and as you can see, I have 3 positions, and each of these positions I took with a different approach. So starting with this first one, so I was able to find this entry using the psychology levels. So what are psychology levels? Psychology levels are price points in financial markets that hold significant meaning for traders and investors. So it's mainly due to its simplicity and ease of remembrance, and that's why they use psychology levels. So those levels now, the psychology levels are round numbers. They are round numbers ending with 0. So now if I go down to 5 minutes time frame, so that you understand how I was able to draw the psychology level. And mind you, every market has its own psychology level. So this is volatility 10, so I count the psychology level in 5. So I'm going to show you now. So first of all, let me bring out one of the levels. So using this line, hope you can see this golden line. So remember, the psychology levels, they are round numbers, right? They end in zeros. So this is, and I told you I count volatility 10 in 5. Volatility 10 index, I count it in 5s, like 5, 10, 15, 20, 25. I hope you understand what I mean. So first of all, you can see this number here, 7010. That's 10, right? 70. Just forget about the first 2 numbers, the 7 and 0. Focus on the 10, right? So after 10, you get 15, 20, 25. Even below the 10, you get 5, 0, right? So now let me put up the at least 3 or 4 of them on the screen. Now starting for the first one, let me change the number to a round number. So this is the number. Hope you can see that the first one is now 7010, right? That's 10. So let me do that for the remaining ones. Now you can see I have about 4 of them on the screen. Now these psychology levels, I combine them with trend lines. So you can either call it the counter trend line, or you can either take the trend using the counter trend line. I'll also show you that. So but in this particular trade now, you see how the market is respecting the psychology levels. You can see whenever the market gets to any of the level, you see the reaction. If I add another level here, you see that this market that went up is at a level, even this one. See how the market is reacting to these levels. So whenever the market gets to any level, it must react. That's how the levels work. So if I put more across, you see this place. See how the market was bouncing on this level. So the psychology level, every market has its own psychology level. So but volatility 10, you count in 5. You see 0, 5, 10, 15. That's how you go. So now if I bring up my trend lines, Do you see this? Just a normal trend line. So whenever you want to draw your trend line, make sure you get at least 3 touches. 1, 2, and this is the third touch. So I had to buy here using the confluence of the trend line and the psychology level. So you can see that the market went up, then came down to this psychology level, and then at the same time you see the trend line went across. So you can see that the market tapped into the trend line, right, and was about to bounce to the upside, and at that same time you have a psychology level here. So that's the confluence. Then that was why I took this first trade. So moving down to the second trade, so going up to the 30 minutes time frame, you see that I have a head and shoulder pattern here. So maybe I'll go ahead and take out the psychology levels now so as to explain, or maybe I will leave it there. So now if you look carefully, you see that I have this head and shoulder pattern, but if you're not careful you won't notice, because most times you look out for the perfect head and shoulder pattern, which comes once in a while. So other times you won't notice that there's a head and shoulder pattern. Like this time around, this is a reverse head and shoulder pattern, right? Now let me go ahead and remove these lines so that you can see these things clearly. Now I've removed the lines. Now if you take a look at this, now you see that this is the left shoulder of this reverse head and shoulder. So this is the left shoulder, the head. So if it were to be the perfect one, then you get the right shoulder here, left head and the right shoulder. But now this is not the perfect head and shoulder, you know. So this is the left shoulder, the head and the right shoulder. So that was why I put across this trend line here. So this trend line indicates the neckline. So this is the neckline. So the market broke the neckline and it had to come back to retest the neckline. So when the market came down to this to retest the neckline, I had to find another confluence, like to add additional confirmation. I think it was on the 15 minutes. Yeah. So if I zoom in, you see that I have an order block there. You see the candle that I used for this order block. So this is a demand zone. So the market had to come and tap into the demand zone. So this is the candle for the demand zone. So this, I know this is a demand zone, then coupled with this neckline, that's the trend line. So those two are enough for me to take the trade from here. Then the market went up. So I saw another opportunity. I think it was on 1 minute time frame. So that opportunity is for this last trade. So on the 1 minute time frame, so this is the 1 minute time frame. So do you see this? See this tiny order block here? So the market went up, and as it was coming down, I noticed that I have this order block here. So I put across the zone, and then another confluence was this trend line going to the upside. So if I zoom out now, you'll be able to see this. So I had another trend line. So this bigger one now is the trend line used for the neckline of the head and shoulder. But on this 1 minute time frame, another trend line is being used with the combination of this order block. So the market tapped into the zone as well as the trend line, and then I took this third buy. So that's how you combine these things. So even on this second bounce, you can see that this is a W pattern indicating a reversal pattern. So when you get a W pattern like this, you can see clearly from 5 minutes time frame. You can see this is a W pattern, right? Which is a reversal pattern. So it can even be the third confirmation. First of all, the order block, the trend line, and then a double bottom, or you call it the W pattern. So these three are enough for you to take this trade from here to the upside, while on a 1 minute time frame is where I was able to find the third entry for this third position. So guys, that's what it takes. You combine everything you learn in order to be successful in this market. So that's it for this video, guys. I don't want the video to be long, so if you are new to my channel, please like the videos and subscribe to my channel. Thank you for watching.